Welcome back to Investing Talk Podcast.
Great to be here.
Today we're tackling a really big question, one that's definitely on the minds of auto investors. Is now a good time to buy Ford Motor Company?
A classic name facing a modern challenge.
Exactly. We've got some great source material shared by a listener, actually, and our mission today is really to unpack it all.
Yeah, look at the fundamentals, the strategy.
The strategy, the bets they're making, and those critical short-term catalysts. What could move the stock, say, in the next few months?
Right. Crucial period coming up.
Before we dive in, though, just a quick reminder. Please subscribe, like, and comment on this discussion. We love hearing from you.
Absolutely.
And hey, if there's a specific company you want us to look into, just leave a comment below.
Yeah, let us know. So Ford, it's a compelling story right now, isn't it? They seem to be at a real inflection point.
Feels like it.
And the material we have is pretty rich. It covers, the underlying financial health, resilience,
Right.
but also this huge $5 billion bet on the future. All data current up to October 3, 2025, by the way.
Okay.
And I think we really need to focus on what might happen in the next, say, 3 months, key events coming up that could set the tone.
Okay, good. Let's start with those foundational numbers then, because honestly, I was pretty struck by the profitability. Looking at the trailing 12 months ending, June 30, 2025, revenue was strong, $185.25 billion.
Solid number.
Yeah, a solid 5.1% increase year over year. But the net income, that's the real story here, $5.88 billion.
It's a huge jump.
Massive, up 35.2% year over year. How are they managing that kind of margin improvement in such a tough market?
Well, that expansion, that margin story, that's what the market seems to be rewarding. And it's not, accidental.
Right.
It seems directly linked to internal changes, restructuring. The sources really highlight this dedicated cost management strategy.
Tied to the EV platform.
Exactly. Tied to their $5 billion universal EV platform. And this isn't just R&D fluff. It's positioned as a structural cost-cutting engine. They're aiming for, 15% better assembly efficiency?
15%.
And about 20% less parts complexity. They're trying to engineer the margin into the future products right now.
That's ambitious. And when you see how that translates into financial flexibility, the cash flow numbers are pretty staggering, too.
They really are. Specifically, the trailing 12-month free cash flow TTM FCF.
Right. The cash left over after maintaining assets. The real spending money.
Precisely. Ford's TTM FCF hit $6.45 billion.
Wow.
And that's up over 90% year over year. That kind of jump signals immense financial resilience.
And that resilience, you can see it flowing directly to shareholders, which matters for income folks.
Yeah, the dividend yield really stands out.
Industry high, isn't it?
Yeah, 6.15%, paying out 75 cents per share annually.
Yeah.
And that huge FCF jump clearly supports that payout, makes it look sustainable for now.
Okay, but we have to talk about the elephant in the room, the counterbalance.
The debt.
The debt. Total debt is high.
Hatred.
$128.8 billion.
It's a big number.
And when you look at their leverage compared to competitors, it's just night and day.
Yeah, the ratio tells the story.
Their debt to equity is 2.24. The peer median is around 0.85.
So more than double the leverage relative to equity compared to the average competitor.
Which is significant.
And that is the absolute crucial tension point here. This defines the whole Ford investment thesis right now, I think.
How so?
Well, they're making a classic calculated leveraged bet. They're using current cash flow, which is strong, supported by legacy products like the F-Series, the cash cow, right? Using that cash flow and borrowed capital to force this immediate, massive, hopefully cost-competitive shift to EVs.
So the strong free cash flow today gives them the cushion.
Exactly. It provides resilience today to service that debt and invest heavily. And it's a big but.
Yeah.
If the market turns down, or if that $5 billion platform doesn't hit those efficiency targets,
then that debt load becomes a major problem.
Immediately. A severe vulnerability. High risk, potentially high reward.
Okay, so that debt is huge, which means their strategy to, overcome it and lock in future profits, it has to be basically flawless.
Pretty much.
Let's look at that strategy then, their strategic edge. Historically, these massive pivots by big automakers, they often get bogged down, right? Bureaucracy, sunk costs.
It's happened many times.
So why should we believe this $5 billion bet is different? That it'll actually deliver those 15% efficiencies and secure their future?
Well, a couple of reasons highlighted in the sources. First, they're starting from this incredibly strong position in their core profit area.
The trucks.
The trucks. We have to remember the F-Series is still America's best-selling truck line. They practically print money with that thing.
Okay, so that foundation helps.
It funds the shift. Second, their approach to the transition itself is quite smart, seems diversified.
The 3 segments.
Exactly. They've split operations into 3 distinct units, each accountable. You've got Ford Blue, that's legacy internal combustion engines and hybrids.
Yeah.
The cash cow funding the future, like you said. Then Ford Model E, that's the pure EV arm. R&D, tech, aggressive innovation, all in there.
Got it.
And Ford Pro, the commercial vehicles, digital services, high-margin stuff, potentially provides stability in software revenue streams.
So that 3-pronged approach spreads the risk.
Acts as a hedge,
Yeah.
A hedge against, the secular shift. If one area lags, the others might pick up the slack. It's clever structuring.
And the centerpiece of that Model E strategy, that's the big one, the universal EV platform you mentioned. $5 billion.
Correct.
The sources kept calling it a game changer, even a potential Model T moment. That's high praise.
It is, and it's warranted if they execute. It's not just about making EVs anymore. Everyone's doing that.
It's about making them cheaply.
Cheaply and at massive volume. The Model T moment analogy refers back to Henry Ford shifting from, bespoke cars to mass production for everyone.
Right. Revolutionized manufacturing.
And the key catalyst product everyone seems to be waiting for, the big anticipation.
Yeah.
It's an affordable electric pickup.
Okay, not the high-end stuff.
No. While others chased luxury EVs, Ford's big opportunity, maybe its necessity, is capturing that mass-market truck buyer, but electric.
A sub-$30,000 EV truck is mentioned.
Exactly. That specific product is seen as almost existential for them to keep their market share dominance long-term, not just a nice-to-have add-on.
So, okay. Strategy sounds plausible, potentially very potent catalyst product. Is the market actually buying this story right now? Let's pivot to momentum, technical signals.
Good question. The stock has certainly been moving.
Yeah, I saw the year-to-date numbers.
It's in a confirmed uptrend, up over 21% year-to-date, trading at $12.22 currently.
Which is near the top of its range, isn't it?
It is near the high end of its 52-week range, which is $8.44 to $12.43. So the investor question is always, is the good news already baked in?
Has it run too far? But what's interesting, the technicals seem to suggest maybe not. They seem to support more momentum.
They do, actually. The stock is trading comfortably above key moving averages.
That's usually bullish, right?
Yeah, strong bullish signal. It's above both the 50-day simple moving average, that's around $11.53, and the longer-term 200-day, which is down at $10.49.
So holding above those levels confirms the trend.
It suggests the uptrend is intact, technically speaking. And furthermore, the RSI, the Relative Strength Index.
The momentum gauge.
Right. Is at 61.11. That's kind of the sweet spot. Shows strong momentum, but it's not technically overbought yet.
Suggesting the rally could have more room to run before needing a big pullback.
Potentially, yes. It indicates underlying strength isn't exhausted.
And based on all that technical data, the sources mentioned a 3-month bullish trading range outlook.
They did. Cited as $12 up to $15.
Okay, so that implies some meaningful potential upside from here if things go right near term.
If they hit their targets, yes.
So who's betting on this? Who trusts the execution plan? Are institutions buying in?
It seems like it. Institutional confidence looks pretty high. Suggests the smart money is somewhat on board.
What are the numbers?
We see 58.74% of the stock is institutionally owned. That's quite high for the auto sector.
Interesting. What about Wall Street analysts?
Well, the overall consensus is still a cautious hold, maybe waiting for more proof points like those Q3 results.
Okay.
But, and this is important, several major bulge bracket banks have raised their forecasts after Ford detailed that EV strategy.
Ah, so some are moving ahead of the consensus.
Seems so. The highest price target out there currently sits at $15.50. So definitely some bullish outliers emerging.
Okay. So institutional money seems committed. Technicals look supportive. What are the specific events, then, in the next, say, 3 months that could really trigger that next leg up? What moves the needle from hold to buy for more analysts?
Near term, it's very focused on hitting those operational milestones. Number one is the Q3 2025 earnings release,
When's that?
scheduled for October 27th, 2025. Given the performance in Q2 and recent sales data, the expectation, the consensus is for year-over-year growth in both revenue and EPS.
So a solid beat there would be key.
Absolutely. A solid beat would almost certainly maintain, maybe even accelerate, the current uptrend.
What else?
Second, look for more updates, more clarifications, probably before year-end on that universal EV platform.
Details on progress.
Exactly. Any confirmation that they're on schedule, or maybe even ahead of schedule, in hitting those 15% efficiency targets, that would spark significant positive sentiment, I think. Proof of concept.
And we shouldn't forget just the market mechanics, right? Index rebalancing.
Good point. Major index and ETF rebalancing events are happening in November.
Could create volume.
Could create meaningful volume flows, yeah. And potentially amplify any positive price moves around earnings or those product announcements.
Okay, so those are the near-term triggers. What about longer term? What's the speculative buzz?
Longer term, it really circles back to that affordability push. The sub-$30,000 EV truck, specifically.
That's the multi-year catalyst.
That seems the multi-year driver. It's what lets them defend that huge profit pool they built with the F-Series, but in the electric era.
Makes sense. And any market rumors floating around, always have to ask.
There's always chatter, right? We have to mention the unconfirmed rumors about a possible JV, a joint venture, or maybe a software partnership to speed up the Model E platform development. Totally unconfirmed, obviously.
But if something like that were announced...
Whoa, it would be a material upside catalyst, could potentially cut R&D costs, speed up tech development. Big positive surprise.
Okay. But we have to balance the potential with the pitfalls. Let's be fully informed. What are the unavoidable risks here?
Number one, most immediate, most central risk, execution failure. Simple as that.
Everything hinges on that platform.
Everything rides on hitting those universal EV platform efficiency targets. If there are delays, cost overruns, or maybe consumers just don't take to the affordable EV truck as quickly as hoped.
And the whole thesis kind of crumbles.
The investment thesis gets shaky, fast. Another major market risk relates to subsidies, government support.
The tax credits.
Ooh, exactly. Analyst chatter points pretty strongly to the risk that battery electric vehicle sales could slow down sharply if U.S. federal tax subsidies phase out or get reduced.
Which would hurt Ford's transition plans.
Could slow the transition, pressure margins in the Model E segment. It's an external factor they don't fully control.
And finally, circling right back to where we started this,
the debt.
That massive debt load. It's the main structural vulnerability, isn't it?
It absolutely is. While the free cash flow looks robust now, that high debt becomes an immediate, serious problem if FCF falters.
Could happen in a downturn, or if costs spike.
Exactly. Cyclical downturn, unexpected rise in input costs.
Yeah.
Anything that hits that cash flow makes servicing the debt much harder and riskier.
Okay. So bringing it all together then, based purely on the source material we've analyzed today, what's the final picture?
Well, synthesizing it all, the overall picture suggests Ford is kind of a high-conviction momentum play right now.
Despite the risks.
Despite that high structural debt risk, yes. The final thesis derived purely from these sources leans bullish. It rates the stock an 8.5 out of 10.
An 8.5? That's quite positive.
It is, and it suggests the stock could be suitable for two types of investors, really. Short-term positioning.
To capture that Q3 earnings momentum platform news?
Right, and also maybe as a longer-term core holding.
Why long-term?
Because of that established dividend resilience, supported by FCF for now, and what looks like a credible multi-year growth plan centered on affordable EV production, if they pull it off.
Okay, so what does this all mean for you, the listener? Here's a thought to chew on. When we consider Ford's decades of dominance in the traditional truck market, how absolutely essential is their success with that rumored sub-$30 K EV pickup?
Is it just important, or is it everything?
Right. Is it truly necessary to maintain their dominance against global competition over, say, the next 5 years? It almost sounds like that affordable vehicle isn't just an option to explore.
More like the foundation.
Exactly. More like the absolute necessary foundation for their survival, maybe even thriving in this modern auto landscape. Something to consider.
Definitely food for thought.
Well, thank you for joining us for this analysis of Ford Motor Company. We hope this exploration of the source material helps you make a well-informed decision.
Hope it was useful.
We'll see you next time on Investing Talk Podcast.